The Federal Reserve is holding interest rates steady, with the new Fed chair acknowledging the lingering economic effects of the war with Iran. Jared Hill has more.
In his first news conference as chairman of the Federal Reserve, Kevin Warsh confirmed what many expected on interest rates.
The committee decided to maintain the target range for the Fed funds rate,
keeping rates steady at 3.5 to 3.75% for a sixth straight month.
Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East.
Warsh, who's promised the Fed will act independently, noted the country is straddling a strong labor market and inflation that surged to a 3-year high as the U.S.'s war with Iran closed the critical Strait of Hormuz. President Trump Wednesday acknowledged the impact as he celebrated a deal to end the war.
I didn't want to see economic catastrophe. If you kept this going, that could have happened.
CBS News business analyst Joe Schlesinger says holding interest rates could be good for savers, but tough for people looking to borrow, especially as credit card balances go up.
13% of folks who are carrying credit card balances are what's called delinquent, meaning they've had a tough time in the last 90 days. And that's a number that we have to keep an eye on, because if that starts to go up or if the labor market starts to slow down, people are going to have more and more trouble keeping up.
President Trump selected Warsh to lead the Fed after Jerome Powell's term ended. Wednesday, Warsh announced a new task force to probe how the Fed communicates and analyzes data,
with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information.
Another change under Warsh's leadership: no forward guidance or hints at how the Fed could move in the future. Jared Hill, CBS News, New York.